Good afternoon, everyone. Today is February 21st, 2025. We only got 1 month until spring starts. After today's wrap, we're going to talk about financial planning in today's fast-paced world. I'm Stephen Herwire, owner of Herwire Financial Plans with Direction. So, in today's fast-paced environment, careful financial planning is crucial when it comes to growing and preserving your wealth. The decisions you make today could have a lasting impact on your finances. Please use the checklist below to give yourself an idea where you are with your financial planning and strategies. Items like where's your money? How do you budget? Do you optimize your retirement accounts? Are you up to date on all your tax planning strategies? Are you going to make an impact on your community? Let's start with where's your money? Knowing where your money is the first step in designing or modifying a financial strategy to align more with your short and long-term goals. Do you have all of your money in one or two accounts, or do you have it spread out to create diversity, which helps lower some of the risk of market volatility? Dave, do you just keep it all in the checking and savings? You keep it in the checking and savings and you invest in equities like stocks, bonds, and mutual funds and several retirement accounts? Do you have a checking savings account, invest in equities, fixed income, and other investments in several retirement accounts? Or finally, do you have that checking and savings, an emergency fund, and a diverse collection of investments, including in several retirement accounts, several 401k, Roth IRA, traditional IRA, other employer-sponsored plan? So how do you budget? Creating a budget involves tracking how much money comes in, how much goes out, and where. Your expenses are generally broken up into fixed and variable expenses. Fixed expenses are those that don't change much from month to month, such as rent or mortgage payments, water, garbage collection, utilities, insurance, and debt payments. Variable expenses are just that. They vary in their cost. How do you budget? One of the things Dave Ramsey says, if you don't give all your dollar bills names, they will wander away. And I agree with him. Do you optimize your retirement accounts? So if you've got a employer-sponsored plan like a 401k, 457, or 403b, contribution limit is 23,000 or 100% of your compensation, whichever is less. If you're turning 50 this year or you've already turned 50, you can contribute an additional catch-up contribution of $7,500. Combined contribution between you and your employer is $69,000 per year. Contribution limit on a traditional IRA, and this is also a Roth IRA, is $7,000 unless, again, you happen to be turning 50 this year or have already turned 50, then you get an extra $1,000. Roth IRA. Now, with the Roth IRA, you got to have a modified adjusted gross income under 161 grand if you're single or 240 if you're married and filing jointly. Okay, now there's a new thing as of last year called the Pension Linked Emergency Savings Accounts, PLESAs. As of 2024, specified authorized employers had to add the option of a PLESA to their defined contribution retirement plans. Eligible employees who opt to contribute are allowed to add up to $2,500 per year or a lesser amount determined by the employer. These differ from 401ks and IRAs is that you can go get withdrawals tax and penalty free before you turn 59 and a half. And you want to get the most out of your retirement accounts, and it requires you to understand how each works and how to use them strategically while aligning with financial goals. By the way, as far as employer plans go, there's two that I didn't mention. One's the simple, one's the SEP. We're not going to talk about that, but call me. I'm conversant with both of them. It's never too early in the year to begin planning for tax season. Many of the decisions we make throughout the year will impact your taxes. There are many things like contributing to a IRA or Roth IRA. You have up until tax time to contribute for the previous year. For instance, right now you can still contribute for 2024 up until April 15th. But there are other things If you want to do a Roth conversion or contribute to a 529 to get the tax benefit, ship has already sailed for 2024 because the deadline was December 31st. So you want to figure out when you've got to contribute to your tax advantaged accounts. Do you want to maybe take some investment losses so you can have some tax benefits? Do you want to maybe consider do a Roth conversion? By the way, that's another one that has to be done by New Year's Eve. Do you want to provide financial gifts to your loved ones? Okay, impact on your community. Giving to charity is beneficial for several reasons, but how you do it can impact you financially. Why do you want to give to charity this year? Sometimes people want to just give for tax purposes. Some don't know how much is worthwhile. Some want to wait till retirement so it doesn't impact their retirement savings. And some want to give it in the will or as a beneficiary designation on one of their accounts. Okay, so reasons to visit a financial professional. You've got estate planning questions. Estate planning is basically making sure your stuff gets to where you want it to after you're finished with retirement. You want to take advantage of and explore available tax benefits. You want to make sure you're saving enough for retirement. You have significant student loans, and what's the best approach to pay them down without affecting your retirement strategy? After analyzing the answers to your checklist, we hope you've gained some knowledge and insight into how you think about your finances and the new strategies that you may be able to help implement. Let us know your plans so we can help. Reasons why to bring in a financial advisor. Number one, they'll think of things you won't. Because they have their head into this all day long. A good one will have up-to-date knowledge on the ongoing law changes. And often they'll have access to tools the average consumer does not. And in many cases, this is their vocation. Their focus is on this area, causing them to think beyond a surface level. Also, many have years of experience, meaning there's a chance they've seen your situation or one similar to it before. Here's a few of my sources. By the way, anybody that wants these sources can contact me and I'll send them the link. So once you graduate, be it from welding school, engineering school, or law school, you're going to need a different plan for each of these stages that's tailored to your individual situation. During your working years, biggest, most important question is, am I saving enough and is it in the right place? The sooner you get an answer to that question, the more likely it is you're going to pick the time and manner of your retirement choosing. When you're in the glide path to retirement, which I define as the last 10 years prior to retirement, will the USS Retirement be shipshape on the appointed day? In retirement, how do I avoid running out of money before I run out of life? And finally, see your legacy. That's what I worked hard for, getting to where I wanted it to after I'm done with retirement. I can be reached at herwirefinancial.com. I do in-person Zoom and phone appointments. I'm licensed and registered across several states and can easily add states if there's a need. If you want to schedule an appointment, you can click on the schedule an appointment button in the upper right-hand corner of my website. Want to see more videos like this? Go to my YouTube channel. It's that red button, 2 buttons over from the schedule appointment button. And you can follow me on LinkedIn, Facebook, and Twitter. For those who prefer the good old-fashioned telephone, my phone number is 518-631-2569. Do not text that number. We'll both be sad because it won't get to me. There's a separate texting number right there. Opinions voiced in this material are for general information only, not intended to provide specific advice or recommendations for any individual. All performance reference is historical. No guarantee of future results. All indices are unmanaged and may not be invested in directly. All data is believed to be from reliable sources. However, no representation is made as to its completeness or accuracy. None of this is to be construed as tax, legal, ERISA, or investment advice. Consult your advisor prior to taking any action. Unmanaged index returns do not reflect fees, expenses, or sales charge. Index performance is not indicative of the performance of any investment. Investing in stock includes numerous specific risks, including fluctuation of dividend, the loss of principal, and potential illiquidity of the investment in a falling market. Investing in mutual funds involves risk, including possible loss of principal. Fund value will fluctuate with market conditions and it may not achieve its investment objective. The Dow Jones Industrial Average is comprised of 30 stocks that are major factors in their industries and widely held by individuals and institutional investors. Standard & Poor's 500 Index is a cap-weighted index of 500 stocks designed to measure performance of the broad domestic economy through changes in the aggregate market value of 500 stocks representing all major industries. And finally, the NASDAQ index measures all NASDAQ domestic and non-US based common stocks listed on the NASDAQ stock market. The market value, the last sale price multiplied by total number of shares outstanding, is calculated throughout the trading year and is related to the total value of the index. Okay, everybody, have a terrific and blessed weekend. I'll see you next week.